Good morning, Mr. and Mrs. My name is Paratsna Ayuta Jalangkara. I'm from Petra Christian University, Indonesia. I want to presentation my research, the effect of right issue on investor reaction in the financial sector in the Indonesian Stock Exchange. Introduction. Public companies that want to get additional capital can take corporate action. Right issue is the one example of corporate action. The research results related to the effect of right issues on abnormal return are still very diverse. So the problem in this research is the right issue affects investors' reaction in the financial sector on the Indonesia. The literature review of this research used signal theory. Signal theory states that a recipient can use the company's way of providing relevant information. The company will convey that the company has performed well by using financial information to signal the market. The theory used to provide the assumption of information asymmetry in the company. Variable definition first, right issue. Right issue is a company's policy in seeking additional fund by selling restricted shares, especially for long-term shareholder at a specific price and time. Right issue as independent variable measured by dummy variable, where score 1 for companies of financial sector that conduct right issue in the research period, and 0 for companies of financial sector that don't lead right issue in the research period. Second variable is investor reaction. Investor reaction is an investor reaction to information related to the company's performance. Scott 2015. Investor reaction also helps investor determine the decision to buy, hold, sell the share. Investor reaction as dependent variable measured by cumulative abnormal return, and to calculate abnormal return is using market model with estimated period is 120 days, and for the event period is 5 days before right issue, the day of right issue, and 5 days after right issue. Leverage. Leverage is one indicator of investor consideration in investing. The measurement of the level of leverage is used there. Leverage as control variable measured by total liabilities divided by total asset. Firm size. Firm size is measured company size by sales, company capital, or total asset, Masakuri 2016. Firm size as control variable measured by logarithm of total asset. Market share. Market share is often used to describe a company's position in its industrial sector. Oregon 2002, market share as control variable measured by sales company divided by sales industry. So the hypotheses for this research are: first hypothesis, the right issue affects positively on cumulative abnormal return. The second, there is a difference in cumulative abnormal return before and after the right issue. Sample. The data collection used purposive sampling with this criteria. First, there is a data on daily stock price and Jakarta Composite Index for 130 days. Second, registered financial sector companies are actively trading on the Indonesian Stock Exchange during 2016 until 2020. Third, financial sector companies conducted a right issues during the study period. And the last is financial sector companies publish complete annual report. So the sample is 330 companies. The result of this research for the first is hypothesis test result, where the variable size is significant negative to variable cumulative abnormal return because the significant value 0.004 is lower than 0.05. And the other variable like issues, DAR, and market share show that insignificant positive to variable cumulative abnormal return because the significant value is greater than 0.05. So, first hypothesis in this research is rejected because right issue has no significant effect on cumulative abnormal return. And the second result is cumulative abnormal return paired t-test result before and after right issue, where showed significant to-test value 0.219, where is greater than 0.05. So the result is rejected, second hypothesis, because there is no difference cumulative abnormal return before and after the right issues. And that is all for my presentation. Thank you for your attention, Mr. and Mrs.